There's an Indian company that's been quietly architecting the AI revolution inside some of the world's biggest brands, and now they're about to go public. Today, we are diving deep into the IPO of Fractal Analytics. We're going to break down their pretty unique business model, their incredible financial turnaround, and what this all means for the future of AI. This quote really sets the stage perfectly. The whole idea of an AI transformation isn't something that's going to happen. It is happening right now, all around us. And the companies that are actually leading that charge, well, they're becoming unbelievably valuable. So you have to ask, right? When the absolute giants of industry, we're talking the Cokes, the Procter & Gambles of the world, when they need to plug this transformative power into their businesses, who do they call? Well, more and more, the answer is a specialist firm from India, Fractal Analytics. All right, so what is Fractal exactly? To really get a handle on this investment, we first need to understand the business itself and how it's evolved over 25 years from this small analytics firm into a global AI architect. Okay, so this is their mission statement, but the key phrase I want you to focus on is power every human decision. This isn't about replacing people, not at all. It's about building AI co-pilots that make human teams faster, smarter, and way more effective. That's a really important distinction. And check this out. This shows their incredible reach. We're talking about a huge chunk of the world's top consumer packaged goods and healthcare companies. These aren't startups. These are the biggest, most complicated organizations on the planet, and they are trusting Fractal to build their AI future. Okay, let's get into how Fractal is actually put together, because this, right here, this is their secret sauce. It's a really unique model that manages to balance stability with some pretty explosive innovation. So here's how they do it. Think of it like a car with two engines. The first engine is Fractal.ai. That's the core consulting business, the one that works with all those Fortune 500 companies. It's stable, it's profitable, it pays the bills. But that engine is actually fueling the second one, Fractal Alpha. This is their internal incubator, and its whole job is to build the next big thing in AI. It's their bet on the future. And this alpha engine isn't just some theory on a whiteboard. It's producing real-world cutting-edge products. Take Qure.ai, for example. It's using AI to help doctors read X-rays and MRIs faster and more accurately. Then you've got Kaleido, which is playing in the generative art space. So this is way more than just consulting. It's a full-blown product factory. Okay, a unique model is cool and all, but how does it actually translate to the bottom line? At the end of the day, the numbers have to tell the story. So let's see how they stack up. First, let's look at fiscal year 2024. Now, you see a net loss of over 54 crore rupees. And on its own, you might think, that's not great. But hold on. This was a deliberate choice. It was a period of really heavy investment, pouring money into R&D and funding that Fractal Alpha engine we just talked about. But then, just 1 year later, the script completely flips. Those investments start paying off in a big way. And the company swings from that loss to a massive net profit of over 220 crore rupees. Let's just put a number on that turnaround. That is 503% growth in profit in a single year. This is the key takeaway here. It suggests their business model is incredibly scalable. As revenue goes up, profits go up even faster. That's exactly the kind of momentum you want to see heading into an IPO. So this table puts it all into perspective. You can see that consistent revenue growth, which is great. But honestly, the most important number on this entire slide might be the last one. Net revenue retention of 121.3%. Let's quickly break that down because it's important. It means if you take all their clients from last year, those same clients are spending 21% more this year. They're not just staying, they're buying more and more. That is the sign of a very, very healthy business. Okay, so they've got a unique model, they've got strong financials. But let's be real, the AI world is getting pretty crowded. So the next logical question is, how do they actually stack up against everybody else? And hey, it's not just them saying they're good. This is a peak matrix from the Everest Group, a major industry analyst. And they place Fractal firmly in the leaders quadrant. What that means is they're recognized not just for the business they're doing today, but also for their vision and their ability to keep winning in the future. This is a huge, huge stamp of approval. This chart right here reveals a key piece of their strategy. Look at the IT giants like Accenture. They do a little bit of everything for everyone. Fractal, on the other hand, is laser-focused. Almost 70% of their business comes from just a few data-heavy industries: consumer goods, retail, and tech. And why do they do that?
because that focus lets them build deep, repeatable expertise that a generalist just can't match. They go deep while everyone else goes wide.
So their competitive edge really comes down to two things. Compared to other specialists, Fractal brings a deeper understanding of human behavior to the table, plus that powerful Fractal Alpha innovation engine. And when you compare them to the IT giants, they offer pure-play AI expertise and the speed of a specialist. They've managed to carve out this really sweet spot right in the middle. All right, now we get to the main event, the IPO itself. Let's break down the structure of this deal and, most importantly, where all the money is going. So here are the key details of the offering. The company is looking to raise nearly 3,000 crore rupees. That's about 340 million US dollars, which places its total valuation well into that unicorn territory. Now, this breakdown is really crucial for understanding what's happening with the money. About a third of it is a fresh issue, which means new cash is going directly into Fractal's bank account to fuel more growth. The other two-thirds is an offer for sale. This is pretty typical for a company this size. It's a chance for the early venture capital investors who funded Fractal's growth to, cash out some of their stake. So what's Fractal going to do with all this new cash? Well, the plan is pretty clear. They're going to double down on everything that's working. They're pouring more capital into that innovative Alpha division, they're on the hunt for strategic acquisitions, and they're strengthening their balance sheet. So let's put this all together. With everything we've looked at, what are the key arguments for and against this opportunity? This is really the core of the investor's dilemma. So it really all comes down to this. The bull case is super compelling. You've got a pure-play AI leader, a unique business model, and just incredible financial momentum. But the bear case is just as real. They're heavily dependent on a few large clients, it's a brutally competitive market, and they have to keep spending a ton of money just to stay on the cutting edge. It's a classic growth versus risk scenario.
And that brings us to our final question. A lot of experts believe we're entering what's called the agentic era, a time when AI won't just analyze data for us, but will actually act on our behalf as these autonomous agents, running huge parts of our economy. And in a world that's being so fundamentally rebuilt by this technology, you have to wonder, is the biggest risk of all just standing on the sidelines?